Thank you so much, Tim and Managing Director Menon, for such an engaging session to kick things off today. To everyone who's watching, my name is Greer Mizels, and I'm the Chief of Staff here at the Institute of International Finance. And I'm really honored to be with you all today to moderate this next panel, which is titled Views from the C-Suite, Financing Transition in Emerging Asia. I'm joined here today by three individuals who are really perfectly situated to unpack some of these challenges and opportunities that the region is facing. With me today is Marissa Drew, who is the Chief Sustainability Officer for Standard Chartered, Donald Kenick, who is the Chairman, Prudential Insurance Growth Markets and Chairman of Prudence Foundation, and Sally Wang, who is the Chief Executive Officer of AXA Greater China. Thank you so much for being with me here today. But before we begin our discussion, just a friendly reminder for our guests today to please feel free to submit your questions throughout this session using the IIF meeting app. We really do like for these discussions and these sessions to be as interactive as possible. So don't be shy. No question too small, and we look forward to hearing from you. So with that, I guess let's just jump right in. Marissa, maybe let's begin with you. Standard Chartered has announced really ambitious decarbonization goals, including 2030 interim targets and a goal of reaching net zero by 2050. Do you think you could spend a couple of minutes just speaking through some of the added challenges of reaching these goals in emerging markets? What unique challenges does EM Asia pose?
Yes, indeed. As our previous speaker pointed out, and as you're getting at the heart of the question, which is when we think about net zero commitments that have proliferated up to leading and post-COP, what we find is that most of the standard setting and a lot of the lens has been for OECD countries. And to contextualize for a Standard Chartered footprint, for instance, out of our 59 markets, 33 countries still do not have a net zero commitment. So that, I think, right there almost says it all, is that as we decarbonize and as we meet our commitments, what we're talking about through Scope 3 is our financed emissions. So if our clients are not on the same net zero pathway, this becomes a very challenging exercise. And then even for those who have made commitments, those may not necessarily be aligned on the same time frame. For instance, India has a 2070 net zero target. And then, again, as our previous speaker alluded to, this definition, because these rules have largely been written for the West, this perspective on what is truly a pathway to a greener future is based in the concept that you must wean yourself off fossil fuels, but our economies, and almost assuming that coal doesn't exist, and yet our economies are largely dependent on fossil fuels and indeed coal. So those are all the challenges, but I don't want to harp on challenges because there are very, very encouraging signs. We have countries like Indonesia and Vietnam who are arguably out of the diaspora of the developing markets. They are relatively high carbon emitters because of their reliance on coal, and yet they have made commitments to sunset coal, in particular Indonesia, by 2055. And that's a tall order for them to get to. But I think what's encouraging for us is that commitment there means that we can be on that same pathway toward a net zero operation. And we want to be there to finance them along the way.
Great. And yet you bring up a couple of really good points. EM Asia is not a monolith. Different countries are at different points on the journey. Some do have net zero commitments, some don't. The timeline is different. With that in mind, Sally, maybe I'll turn to you. Maybe even if we put aside the phrase net zero for a moment and think about kind of a low carbon transition ultimately to get to net zero. How would you describe some of the levels of interest and awareness in the low carbon transition among the Chinese financial sector, let's say? Are there any key initiatives or public policies that have arisen in response to this growing area, which can sometimes be at a different stage maybe than some of the other countries that Marissa was just talking about?
Yeah, thank you, Graham. Also, thank you for having me in this panel. To your questions, I would say the level of interest and awareness is definitely increasing in the past few years, especially after President Xi announced in 2020 the very ambitious commitment to cut emissions at a much faster pace by achieving carbon peak by 2030 and then achieving carbon neutrality by 2060, which is even more challenging phase in phase 2. So with this fast track to decarbonization, renewable power and generation capacity has nearly tripled in the past 5 years. The sales of electric cars now is over 20% of the total car sales. But this is just the beginning with the ambitious target, and there's a long way to go. So hundreds of trillions of investments will be needed to transform the economy and the energy system and how emissions are managed to achieve the net zero by 2060. So we see that there's a boom in green financing in the recent years. So now China is the world's second largest supplier of green bonds. And this is the platform for financing key national development objectives, obviously. So green bond market, I think, will likely continue to receive strong government support. And with the increasing global appetite on green assets, I think China green bonds are going to be quite attractive for international investors, especially with the strong policy support, especially for those who actually can align with the international standards and disclosure.
Yeah, that's, those numbers are always really pretty staggering. The world's second largest green bonds, such an aggressive move on electric vehicles. It's really been such a kind of sea change over the past few years. Don, though, let's bring you in now. So one thing we can be sure of, everything we're talking about, the decarbonization process requires money and lots of money. So one of the challenges is really, how do you mobilize funds across the board, private sector, public sector, et cetera? How much is needed? We always talk about this gap that seems sort of like this insurmountable number that we need to try to bridge. How do we close the gap? What are your thoughts on this? And should we be maybe a little bit more optimistic than sometimes we are in these discussions, or is some of our pessimism really well placed?
Thank you again for the opportunity to be here. What motivates us as a species to do anything? Right? It's urgency or importance on one side and opportunity on another side. So I think if we think about the same question, how do we mobilize for this challenge? We come to the same segmentation of that issue. You don't have to convince the companies on this panel that there's importance and opportunity in emerging Asia. I mean, AXA, Standard Chartered, Prudential have all been operating across the region at scale for quite a long time. The question, I think, is more important if you're talking about mobilizing global finance for the huge numbers required, is how to acquaint others who aren't quite as active or have the historical presence with the question of urgency or importance or opportunity. So just quickly, let's just touch on the first part. The emerging markets, frontier emerging markets, have accounted historically for only about a third of cumulative carbon emissions. So they didn't cause the bulk of the problem, so to speak. But today, they're almost 2/3 of the total current emissions. And if you look at the growth in emissions over the past decade, they're about 93% of the growth in emissions. So clearly, you can't solve a problem of a global scale without strong participation and progress in the emerging markets. But it's not surprising that you've got that very high percentage, because 90% of middle-class family growth and probably higher than 90% of population growth is coming from those markets. So that's the opportunity side, right? That's why you see enthusiasm on this panel for participating in these markets. That's where the growth is. And so you put those two things together and you say, okay, well, what about opportunity for the emerging markets themselves? I can say the last 6 years up till June of this year, I've been chairing a European business organization called EU ASEAN Business Council. And 5 years ago, we took a trade or investment mission into the ASEAN countries. And you brought up energy transition or climate transition. You might hear a response to, well, that's the environment minister's issue, or that's the energy minister's issue. But today, and I'm sure Sally would say the same thing about China, you bring up this issue and it's everybody's issue. The transportation minister, the agriculture minister, the trade minister, who's trying to make sure that the industries remain competitive and therefore they need to have greener energy to produce exports to avoid higher costs of border adjustments, for carbon border adjustments in the future. So this opportunity side is starting to kick in strongly across the region. and you see the numbers being considered for electric cars and the supply chains around that, and batteries and sustainable agriculture to create jobs of the future. So I think when you put these two things together, you got a lot of motivation between the emerging markets themselves and potentially for the global investment community. How big is this challenge? Can we do it? Well, just take some numbers from the IEA and SIFMA. If you look at global financial totals, what I see the numbers: 150 billion current investment for clean energy needs to go to $1 trillion by 2030. That's a 6-fold increase just for clean energy. That's excluding China, by the way, Sally. That's for emerging markets ex-China. 6-fold. That's a lot, $1 trillion. But is that really a lot? Well, the gap, that $850 billion, what is that as a percentage of global fixed income issuance? What I see from the 21 numbers from SIFMA, that was $27 trillion. So we're talking about less than 3.5% of that global number to fill that gap. So is that insurmountable given all the opportunity and the challenge? It doesn't seem insurmountable, but as you heard very well expressed by Ravi Menon just a few minutes ago, there are still a lot of pieces that need to come together to make those flows happen. But it's certainly nothing to get pessimistic about. We work hard.
Right. No, that does make sense. And, it's always kind of refreshing to hear. And to be honest, we're starting to see that more here in the United States, where I'm based, this kind of whole of government approach to tackling these issues. It's no longer just siloed in within a particular department or within a particular agency, but it's really, the realization that it takes a village to really tackle these things is very, very true. And, Sally, I'm sure that what Don mentioned in terms of what you're seeing out of China is also a similar situation. Maybe Don, let's stay with you for a minute. You've been involved in a really interesting project that's bringing together the EU ASEAN Business Council, which you mentioned you used to chair for many years, SDIP, and the UN Net Zero Asset Owner Alliance. And you all have either just released or in the process of releasing, I don't know exactly how cutting edge we are right now, if it's kind of the moment, a paper that's on emerging market transition investment. So in it, you discuss the multilateral development banks, which is something that the managing director, Menon, just discussed right before us, the importance of the MDBs, using their balance sheets. What do you see or what was coming out of this report around the role of MDBs in this equation? What more should they do? How can the private sector, which a lot of our audience is comprised of today, and the public sector really work better together? Again, we're trying to mobilize these billions of dollars, trying to address a global problem. What were some of the takeaways on the MDB front?
Well, thank you. Well, the paper is out. I don't know if your colleagues can put a link up on the chat box, but it is out. It's on the website of the EU ASEAN Business Council. I'm sure it'll go up some other places as well, hopefully. It's a discussion paper, so we really would like people to discuss it and come back with reactions. But it was trying to focus on what can we do in the next 18 to 24 months for emerging markets, not looking at 2040, 2050, but urgently, right? We can do soon. On the MDB and DFIs, don't just focus on multilateral development banks, but also the development finance institutions. They've been a core of economic development assistance for decades, right? So they have an important role to play. They're playing an important role. The question is, what do we need to do differently and better now that we have this urgent, massively bigger challenge to generate finance for? And how do we crowd in the private sector, as you said, as opposed to compete with it, which the typical MDB model historically does. I mean, you're talking about making a loan and holding it on your balance sheet. If the MDB is making that loan and holding it on the balance sheet, that means a private sector institution is not making that loan, whether that's a bank or an insurance company. So the question is, if you really want to, how could you tweak that model, modernize it? And if you look at what the commercial banks did in the 70s, 80s, 90s, was they moved more toward an originate, bundle, and distribute model. So create opportunities for bonds that then long-term investors like pension funds or insurance companies can hold, but the bank doesn't have to hold that on its balance sheet. Why is that better? Well, for one thing, you're not competing with the private sector. You're actually generating packages of investments that the private sector will ultimately hold on their balance sheets. So that gives you a lot more that you can do with your own balance sheet because you're passing this stuff off. So that is, assuming you'll do that, what else, other doors does that open? Well, first of all, if you have a package of emerging market loans or frontier market loans put together by a multilateral development bank or a DFI that has a social standard, has an environmental integrity standard that brings a credibility to it. You have diversification because it's not just a single project, it's a multiple projects. You can add the blended finance that we'll talk about more, and it was just talked about on the previous discussion, de-risking by whether that's philanthropic or the multilateral banks themselves or national developed country governments. Now you have a very attractive investment. What does that do? If you're a small pension fund or a medium-sized insurance company in another part of the world that could never think of investing in infrastructure in Ghana or Cambodia or Indonesia, now your capital becomes eligible because you have a package with data, it's de-risked, you can participate, you have a credible institution and governance, right? So it could open up potentially many more balance sheets, if you will, globally to participate in emerging market transition. So I think there's a lot of opportunity here. The MDBs are already moving this direction. Ravi Menon mentioned the great work that the ADB is doing now on creating energy transition mechanism, working with Indonesia and Philippines. There was a similar kind of national transition investment facility that looks like what we're talking about. It can be done here. So I think there's a big opportunity there, and the MDBs are moving in that direction, but we think they could move quicker.
All right.
More.
Right. No, I'm sort of liking the theme of this panel. A lot of opportunity here, a lot of optimism, a lot of work to be done, but there's some upside, and we're moving in a positive direction. Marissa, let me turn back to you, and maybe as opposed to some of the kind of macro global issues that we're talking about, let's maybe drill down specifically on kind of what's some of the things that Standard Chartered is doing. So, what is your approach or to helping clients in EM Asia to decarbonize? How do you begin to tackle this problem? Are there particular sectors that you're focused on or advisory services that you offer? And, obviously there are challenges. What are some of the biggest hurdles that you all are facing or discovering? And what are the areas of opportunity that you're really, really excited about?
Lots of topics. So I guess maybe picking up on a little bit of what Don, a little bit of what Sally said. So in the first instance, I think opportunity-wise and how we do it, I think we start by, we put out a bold commitment about that we would finance $300 billion on the sustainable side to help our clients decarbonize. So I think oftentimes when you put a number out there, then that starts to get the juices flowing in a positive direction. And how do we do that? We do that through a combination of the use of our balance sheet, deploying that capital to work for and on behalf of our clients. And Sally mentioned the public liquid bond markets. We're very, very active. Last year, we were the #1 green bond underwriter. And we're also starting to see a lot of technological development in these public liquid markets. We started with green bonds. And then I think the investor community said I would like a deeper linkage between those decarbonization targets or KPIs to be associated with that capital that we provide. And then we created sustainability linked loans and bonds that have very specific paths that the issuers are signing up to. And we're big proponents of that. So that whole area of loans and bonds is a big way we're doing it. It's that pure provision of capital. I do want to pick up on what Don said about the public-private partnership concept. I would add to what he said because it's a big area of focus for us and a place where we do get excited because I've been in the capital markets for 35 years. And it is very true that previously we did operate in silos, and this notion that if I'm a development funding bank, this is my wheelhouse, but the minute capital markets can step in, I step out. And the recognition now is this is all bigger than all of us. And actually 1 + 1 is bigger than 2 if we collaborate in the same structure. And I'd point to a development that came out of COP, which I think is actually going to move the needle in some of our markets, which is what's called the JETPs, the Just Energy Transition Partnerships. And this is where the West is effectively committing to help mobilize resource. And that can be money or capacity building, could be helping to share best practice in terms of standard setting and policy making toward very specific markets. So for instance, Indonesia, the US government and the Japanese government are the JETP partners for Indonesia. And then they can bring resources of the development funding banks and all those other things I talked about together with the Indonesian government and the private sector we are all sitting in the room at the same time saying, let's scope the problem, the size of the need, and then let's look at very specific debt structures or equity structures or other combinations to attack those sectors. So this is a systemic overview on how do we accelerate the transition in a country which is reliant on coal and other high carbon emitting energy sources. So one structure could be project finance for a wind and solar farm. One could be, transitioning to electric vehicles and so on. But this is this really interesting combination of skill sets that are coming together in the exact same project, attacking it at the same time. And I genuinely believe that all those parties together create a multiplier effect. We've done about 10 billion of blended finance, and our chairman is actually sitting on something called the GISD, which is, again, this idea of a blended finance partnership. And that one specifically is focused on social topics that are going to help promulgate UN SDG finance with private capital, mobilizing that. So that's one area. And the third area I want to point to, which was alluded to, is the carbon markets. There is no doubt in our markets, no matter what we do, there's this hard to abate tail. And we do not want to create an opportunity for people to continue to do business as usual, but we also have to recognize that we are going to have to invest in purchasing offsets, but we want those offsets to be of high quality. We want to be a force for good in the integrity of those. We also want to push more projects of high quality and vet these for the market, because markets can't scale if they don't have confidence, and we want to provide confidence. So an area that we feel we've got a big role to play is in these voluntary carbon markets. I'm sitting in Singapore at the moment, this joint venture that we have with the Singapore Stock Exchange, DBS, Temasek, to found the Climate Impact X, or CIX exchange, is doing just that. We want liquidity, we want to have transparency, we want to get a good price on carbon, and we want to be funding the best projects. And we think then that will help create those enabling conditions for that market to scale to get that last bit. So, there are a myriad of things that excite us, but I think, at its heart, it's the fact that we are creating opportunities to mobilize capital at scale to really push this decarbonization agenda. You asked, I don't want to take too much of the mic, about further challenges, but just one moment, because I touched on a little bit that a lot of the rules were written for the West. I also want to say that it's not just a West and EM or West and Asia. Asia is an enormous market, broadly defined. And I think we also have to recognize that Asian countries are different places. I was just had the good fortune to spend some time with Mark Carney with our leadership team just yesterday. And we were talking about this, that we almost have to then further bifurcate Asia, because you have what I call almost middle income, relatively speaking, high carbon emitting countries. Weirdly or perversely, they're actually going to have access to capital, because that capital wants to flow in to help them decarbonize. But what about frontier markets that aren't high carbon emitters, that are probably low rated credits for a variety of reasons? They have a much harder time accessing capital. And what's that capital going to do? Because they're not actually high carbon emitters. We need to figure out how do we take those same technologies about taking risk off the table, whether it's credit wrappers or first loss positions, to ensure that capital flows there. Because in those countries in particular, I feel a sense of unfairness on their behalf, because they're disproportionately affected by climate change. They need the capital to support resilience and adaptation, and yet they're not really contributing to the problem. So I want to make sure that we think about that as we talk about the Asian markets, and that there is a focus on that, because that adaptation piece is a biggie for a lot of those markets.
Yeah, absolutely. And a lot to, I guess I asked a lot of questions, and there's a lot to unpack in your answers. And really, obviously, like what you were talking about with regard to the voluntary carbon markets, we heard Tim Adams, the IIF president and CEO, talking about that just before. And I think you really, got it right with the issue of liquidity, transparency. There needs to be confidence in the markets. They need to be high quality. I mean, that's 100% correct. Sally, let's turn to you and maybe pick up on a couple of these themes. And then I'm actually getting a lot of questions in from the audience, which is great. So I'll kind of turn to those in a minute. But what about for AXA? Are there specific examples of sectors or types of insurance that you're focused on. I know earlier you had talked about electric vehicles and their importance. Obviously, the ag sector is critically important when we're thinking about these things. And maybe even drilling down a little further on that. Are there any unique circumstances that insurers face in pursuing this net zero transition? Are there additional considerations that an insurer needs to be attuned to that maybe, a bank isn't quite as focused on?
Wow, that's again a lot of questions. Thank you. Let me think. So as an insurer, I think AXA globally, as you asked the question, what is the specific kind of examples and types of insurance? We are confronted by consequence of climate change every day, right? Losses and claims from tropical storms, typhoons, flood, drought. So we have been committed to limiting the impact of all these activities on the environment, both as an insurer and as an investor. So for insurance product, we focus to increase our volume on green insurance products. Actually, there's a global target of 1.3 billion euro in premiums by 2023. So example could be like motor insurance, as you mentioned, and on electric cars and hybrid vehicles, insurance coverage for like renewable energy plants, equipment, some green buildings now. There's actually some of the technology that you can use to make sure the buildings are greener, saving more energies. I think more importantly, like Marisa and Donald said, as an investor, we also need to reach a green investment target. I think there's a target set by the group of euro 26 billion by 2023. Not only that, I think one of the other elements that we as an employer will have to do to train and well equip our employees in climate issues. So to help them to think about how to, each one of us can do the transition as well. This is particularly important also to engage our customers, because most of the time, not just some of the customer segment, maybe they're not thinking about it, maybe they're focusing on profitability. It is actually essential for us to engage our customers, to support them and educate them on how to manage this transition risk. And this actually can also help to manage our liability side, because we're also paying claims. And that is a win-win situation when we can consider what they need and what insurance can provide. I think we are well placed to be the bridge between the insurance, the customers, the society, and the business. I think these are all the consideration that we have to think about. And AXA Group actually has been taking bold steps to do this, I think since 2015. On the investment side, there's a lot we've done, like divest from coal. We also have commitments to preserve forests and biodiversity. Recently, we also announced including the investment of 1.5 billion euro to support the forest management. So these are all the targets that we set for ourselves to do the transition. I think it is important to just think about how do we engage partnership and customers so that the voice and the opinions and comments from everyone on this panel and other panels can amplify to help the world to transition.
Yeah, that education piece is so critical, and it's educating and sort of upskilling your own staff and the people who work within your organization, but also society, at large. This for some of us, these aren't new issues and new concepts, and for others, it really is. And I think Sally, you and I had also been talking. There was potentially a new partnership that you had been working on with MasterCard or around some of these pieces. Could you maybe tell the audience just a little bit more about that as well?
Yeah, in Hong Kong, we because we wanted to have the voice bigger, so we believe in partnership. I think having a partnership together with some like-minded business like MasterCard, they have a coalition on forest management as well and biodiversity. I think it just matches together. So I think all the organizations together, when we do it together, we can go to the market and set an example and educating the society what we are doing and what everyone can do, because this topic is not a one individual or two individuals or even one government or two governments. This is really a global issue. And I think this has to be discussed internationally so that we have this global convergence. So more partners to amplify the voices is better.
Right. Yes, I absolutely agree. Let's shift, maybe gears a little bit. And I've got some questions in about this, so I'm going to try to work all this in as best I can in short amount of time. One criticism or challenge that is often discussed is how to go about decarbonizing emerging markets and emerging markets in Asia, which really takes into account some of the specific challenges that these countries face. And Marissa, you've talked about, obviously, we can't think about emerging Asia or Asia as a whole as a monolith. There's different challenges for different countries. The way one of these questions was phrased is, sustainable finance is often viewed as exclusionary, especially in emerging markets where economic growth is the short-term priority. But what's being done to make sustainable finance more supportive to growth and transition? And this sort of gets to the point of a just transition. How do we make sure, how does Standard Chartered make sure, how do we, more broadly speaking, make sure that clients are making this transition in a just way that drives sustainable economic development, but also takes into account these very real concerns that were discussed and that, Ravi Menon was talking about, that sometimes going from coal to clean coal, that is part of the transition to oil and other fossil fuels. So how are you all thinking about this?
Sure. And such a great question, because this is what we grapple with every day. I think there's perhaps maybe a misperception that the transition comes at the expense always. It's almost an unwritten rule or a foregone conclusion that it comes at the expense of economic development. And I think we'd like to reframe the narrative, because if this is done well, what it does is protect you from the risk of job loss and economic degradation. While if you're doing it right, you're creating the jobs of the future. And that's what we want to emphasize all the time when we talk. And that's what we mean by a just transition. Just to maybe give you a few numbers, we produced a report called Just in Time, which was focused on this very issue. And what we found through our research was that the emerging markets, broadly defined, need roughly 95 trillion of transition finance to achieve net zero by 2060. So 98 trillion is needed. Without this transition, this is the risk piece, emerging market populations would be $80 trillion poorer by 2060, right? So you can't sit still, because we are going to face the risk issue, and Sally touched on it, and I think we intuitively know this. But what can we do in the process? So while we move off of these industries, what we've got to be doing is redirecting the capital toward those industries of the future. And if I think you're being careful about it, what you're doing is that you're uplifting the education of your people for those jobs of the future. But these are the debates that we're having with our clients. We talk to a finance minister of a developing country, and they're being pushed by external forces to, sunset coal right now, Actually, you can't do that right now anyway, because you really would create an issue for the population that are going to be without heat and electricity. But if you're doing that in an orderly way, we can then build those industries of the future. And that is the industrialization that you want. You don't want to continue to develop in the wrong way, because that isn't sustainable. And those assets won't have value in the future, because they won't be able to attract capital. Banks like ourselves, in due course, are not going to be able to lend. The development banks won't lend in the future to those dirty industries, because it's not going to be acceptable for them to do that. They'll lose their license to operate. And so these are the kinds of things that I think we want to make sure that is well socialized. So I think I would just make sure that we say these aren't mutually exclusive. In fact, they are additive and mutually positive if done well, and we've got to do it in an orderly way.
Yeah, I'm glad you made that point, that it's not kind of
just to add something to that.
Yeah. And then Don, I was going to turn to you, and before we start, I know we're at time, but I'm taking the chair's prerogative to go just a couple minutes over, because this discussion is great. So Don, just a couple minutes.
A couple of things. You asked to going back to one of your questions, and I'm blended in with the last one. You asked, what could the insurance industry, what do we do differently than what banks do? So a couple of things. We are supposed to be protecting people. Okay, so Sally mentioned automobiles. We really are not a property casualty insurer. We insure people. So one of our big priorities is inclusion. So how do we make health inclusive to people? So being able to offer products to people who are in vulnerable situations, making sure that you can do them at a digital bite size and you can reach millions of more people. So that's a major focus. We're focusing on it. I think it's a big opportunity for our industry to deal with the challenges, health impacts that climate change is going to bring. We're talking about communicable diseases, malaria, dengue fever. We're talking about heat effects, which have a particular implication for elderly populations, and mental health. We're talking about displaced populations and displaced livelihoods. So there's enormous opportunity and duty of the insurance industry to find ways to serve that and make it inclusive. The other thing we do, which is we're the long-term end of the financial system, right? We're making long-term commitments, long-term liabilities, want to match those with long-term investments. So we are there to try to help with this transition in terms of long-term investment. That means working inside the emerging markets, not just bringing the outside capital in, but trying to build up the financial system, the economic engine of finance, bond markets, equity markets, work with the stock exchanges, try to help them build financially sustainable green principles into the basic regulations, mainstreaming it, not just have green bonds, but let's make a greener financial system overall. So I think this is something we can all collaborate on and do better. Just one specific example, we spent a great deal of time, several years, researching, modeling, talking to people in the energy industry, and actually came out with the idea of the energy transition mechanism a few years ago, which is the one the ADB is implementing in the process of working with Indonesia and I think Philippines and some other markets to implement. Being able to think and bring ideas that will solve the problem that Ravi Menon really focused on. How do we move the brown industries to green? You need funds to transition. And so we as an industry, banking industry, insurance industry, need to be coming up with ideas and support that deal with these tough things. I mean, it's one thing to talk about coal transition, but who's going to actually fund that? And then how do you make that acceptable and virtuous? Because it's essential to what you said. We can't keep these economies, people are going to lose jobs. They need to grow. They still have to deal with education, healthcare, other basic sustainable growth needs that we take for granted in the more developed countries. So I think there's a couple of roles to play there that are unique, and the insurance industry should be, focusing on it. We are.
Right. No, and the whole idea of greening the entire financial system is obviously critical. I'm getting the virtual hook from the people in the green room, which is too bad because I have a lot more questions, and there were other audience questions that I wasn't actually able to get to. But let me close by just a huge thank you, Marissa, Sally, Don. This has been a great session. I think it's a great panel to kick off the event today. I think it's always a testament to the caliber of speakers when the moderator comes away learning new things. I certainly did today, so thank you all. And to the rest of the audience, please join us in just a couple minutes for a great In Conversation session on climate finance for emerging markets with Governor Perry Warjio from Bank Indonesia. Thank you, everybody.